All right, we'll see.
All right, so special guest. Let us go ahead and bring in Michelle Mish Schneider at Market Minute. Michelle, good morning. How are you?
Great, and it's such a pleasure because Tracy and I have never met personally, even though we've stood basically back to back in the same room at money shows in the past. I'm really thrilled to meet you finally. And Jim, I don't know you as well, or at least I'm meeting you for the first time. So thank you. Thank you for having me on.
That's all right. No one knows who I am. I keep a low profile. Uh, so Michelle, thanks again for being here. Right off the bat, we were talking with Tracy a second ago, and in this environment, it almost seems like the earnings announcements are, it's a shoulder shrug. It doesn't seem to be the focus anymore. And I just wanted to ask you, is that true, or what are we seeing in some of these earnings coming out?
Well, personally, I've never really took the earnings as anything particularly forward thinking. The guidance to me was always more interesting, or whether it beat, or did not meet the expectations. So, I'm not that kind of a trader that sits there and crunches numbers on earnings. However, with that said, Tesla's not really a surprise because obviously everything that's been going on politically with Elon, and then the numbers missing so much. And even though he's trying to expand the business, I wouldn't necessarily say it's dead. Google was no surprise because there's been a lot of chatter about how even their Google searches, which people left for dead, was doing better than they thought, some of the other revenues. In terms of the other companies, AI companies doing well, I think that's not a big surprise. For me, what I'm really going to be interested in is what happens once we start looking at the more consumer-based stocks. I mean, we saw Chipotle, not that I would consider that to be a barometer, but I'll be looking a lot at what happens with places where people shop. When we get to Costco and Walmart and Target and Ulta and some of those other places.
Oh yeah, I mean, I single-handedly support the Costco stock. Every time I go there, it's just boots on the ground. It's
Yeah.
you're
I don't
waiting in
think I've
line.
ever gotten out of there without spending $500. I don't even know what I buy, but it always seems to be at least $500.
I know, and you always end up with that one thing it's like you don't need, but it's like, oh, look, you could extend this and it could clean out the gutter and you could just stand there and hold it. You don't need that, but you're gonna buy it because it's super cool.
Right, exactly. But I'm not in the stock right now. I'm looking elsewhere when it comes to the retail space, but we can get to that.
Okay, and so let's think about tariffs though. So it seems to be obviously tariffs are the focus on market sentiment and trader behavior lately. Every time there's a tweet, or I guess they're called X's now, or Truth Social, wherever they're coming from, it moves the markets considerably.
Well, I think the biggest focus that I'm looking at in terms of tariffs really is the metals, particularly the industrial metals, and what really happens when we're talking about steel and copper, because we know that can wreak a lot of havoc in other places,
Yeah.
not only on pushing costs into the consumers, but in terms of buying cars and things like that, but just, overall construction and housing, and how inflationary, or in this case, stagflationary, will that wind up being? I haven't really seen much in terms of food, although it does seem like anything that's being imported into the United States food-wise is very, very expensive. So there is an impact there. It's hard to say. I try to stay out of the political realm and even trying to guess what the tariff situation is. What I am all about is relationships. I look at the relationships of what I call the inside sectors of the U.S. economy. I look at what I call my trifecta of inflation to see how that's doing. And then I look at certain technical indicators, like in this case, the most important one to me right now is the calendar range, because we do that twice a year, January and July, and the year of a new administration is particularly important. So I like to see what is trying to break out, what is still well underperforming, and what has broken out and might then actually fail, which is exactly what happened in January. We saw this breakout initially, and then, of course, everything started to fail into the April trough. So that's kind of how I focus, as opposed to trying to make sense of all the headlines, because I think you can go nuts trying to do that.
Yeah.
And I wanted to ask first, first a question just about the broader markets, about the index. Obviously, we're all futures traders here, and so what are your thoughts on the ES and Nasdaq? I mean, it seems to be just a grind higher, even though we keep hearing that everything is going to be terrible because of these tariffs and we're going to see inflation, and yet markets seem to brush that off and just continue to move higher. So what are your thoughts on that? Do you see us making any sort of correction at any point, or are we just grinding higher?
Well, that's a great question, Tracy. So essentially what's happened yesterday in particular, but obviously we haven't opened yet today, was that the S&P 500, NASDAQ, the Dow even, and the Russell 2000, that's what I'm particularly interested in right now, they all cleared their July highs yesterday. And this is kind of what happened in January. This is what I'm talking about. So in terms of the actual breadth of the market, we know that there is some deterioration under the surface. But in terms of the overall indices and even retail sector, which is something that I watch very keenly because of its impact on GDP, we're seeing all of that break out as of this end of this week, and we'll see if we get some follow through. If we get follow through, I think you have to like stay long till you're wrong kind of thing. I don't believe that you should try to second guess when the shoe's going to drop. However, with that said, if the highs of what we saw coming into yesterday, or the lows, I should say, of yesterday, which would match the July high, start to fail, then I think what we're seeing right now is where those euphoria numbers come in, and maybe we're a little bit overdone and we're due. And then some of these underlying factors that we've been talking about here, like tariffs and some of the other aspects that are impacting the market. I saw the lead economic indicators. I don't know if this was correct or not, but maybe Tracy, you know probably better than I do, that they were down, like down, showing the potential of a recession, which is really interesting. So my big question right now from a macro standpoint is, are we going into a disinflation? And my guess would probably be no, or at least nuanced. Or are we going into stagflation or deeper stagflation? And my guess would be yes, that's kind of where we are at. And can things run for a while into that area until at some point we start to see some kind of reckoning?
Yeah, I mean, that seems to make sense. We have metals up, we have, commodities in general sort of up. When does that start filtering into the market? Which kind of leads me to energy, which I wanted to talk to you a little about. We at $65, that is, even though it's not the highs that we've seen, particularly since 2022 after the Russian invasion of Ukraine, but it's still higher than kind of we have been trading overall. Yet, what are your thoughts exactly on this market, and why do you think sentiment has been so poor across the energy sector? Because we're not just seeing it in prices, but stocks as well are very unloved.
Exactly. And that's when I get interested. And I've been actually watching a lot of your posts about some of the fundamentals, particularly the lowering of the rig counts, the lack of incentive for producers to continue to keep drilling at these low prices. We read the story, I think it was Chevron, that said they're basically not going to do any drilling at all. They're just going to live off of their cash assets until 2027. These are the kinds of things that a commodities trader, and I know you are one as well, really loves to see. I mean, from a humanities standpoint, I always have to say commodities, when they go up, it's usually for bad reasons for society. So you always have to kind of get through that. But from an actual standpoint as a commodities trader, the fact that oil has not been able to get below $64 a barrel, and the fact that it has held this up this well, and knowing I live right by the Permian Basin, and I speak to a lot of oil and gas people here in New Mexico, and they're very, very bullish, more in natural gas than in oil, but for all the reasons that we've been talking about. So I look at it from a chart. So to me, if we get out over $68 a barrel, and I'm talking WTI, I think that's a huge breakout that has to be followed. And then, like I always say, the price dictates the narrative. We'll figure out why after the fact, but that's kind of what I'm looking at right now. And natural gas, which has just been beaten to a pulp, that may not necessarily be as impacted producers in price. I've read that it depends on the different factors of how suffering the producers become as the price goes down. But nonetheless, I think it's been oversold. And I see it's getting a little bit of a bid today, not much. But if we can get back over, let's say, 440, 450, 460 in natural gas, I think that would be a huge breakout as well. So I'm really on it right now. I think energy and even XLE as an ETF started to break out yesterday. I think that's really where we might see the money in the next few months.
I would love that to happen. I'm gonna tell you the truth. And then I kind of want to move to the precious metals markets. Obviously, we've seen a huge breakout in gold and silver and platinum and even palladium a little bit, even though palladium I don't really consider that much of a precious metal. But so what are your thoughts on this market? A little overdone, or do we due for a pullback, or what are your thoughts on those metals?
Well, number one, I've been into gold and silver, like you, Tracy, for probably about 3 or 4 years now. I mean, ever since we came back after the low in October of 2022, I started building up a position in gold and silver in particular. And then obviously when copper started to move over 5, that was also a really interesting point to break out. You know, what's so interesting is that they're still, even though they've gone up so much, from a retail standpoint, I think they're still pretty much unloved as well, for different reasons than energy, obviously, but I still see tremendous potential in silver in particular. I think if I had to pick one, that's the one that I'm really mostly closely watching. We got up close to $40 and we backed off, but not by very much. And that's what we've been seeing. Every time we dip from a new high, the bears come out. Oh yeah, that's it. The metals are over. But from a fundamental and technical standpoint, I think we're a long way from proving that case. Maybe if we broke down under, let's say, $34 an ounce in silver, I would say, okay, that's it. All's over. And the same thing with gold. I mean, we got back over 3,400, close to 3,500. We broke down 3,200 to me was like an incredible buy opportunity, and we didn't even get down there. I think they're still very, very strong, and I still see a lot of upside. I think you just have to be more in the patience side of things. As far as platinum and palladium, you know, I traded on NYMEX for years, as you had mentioned before, and actually those metals those traders, those brokers in the pit were in a completely different room. So we never, like you, never really considered them to be serious. That doesn't mean that there isn't money to be made, but I'm still maybe from old school, more focused on the gold and the silver.
So Michelle, we're gonna break for news in a second, but I want to ask you this question about copper. You know, we refer to copper as Dr. Copper, a gauge of the global economy. Is this drive towards $6 a tariff move, or is there some underlying kind of, you know, hey, the global economy is good, and we're going to need a lot of copper. Demand's going to be high here.
Well, that would be the traditional school of thought, right? But I think that copper is going up in great part because of the tariffs and because there's been talk of shortages for years now. I mean, it's something that has to be mined. And the idea of bringing copper mining back to the U.S. is probably a lofty ambition, to be delicate about it. And so, yes, there's been some level, at least in Europe, economic expansion, to the surprise of many at the start of this year, doing very, very well. China, obviously a player, but I think it's more tariff driven than economic driven in this country. We know housing prices are still going up, but yet we can also see that housing sales have started to flatten a little bit, to decline because of those housing prices, and copper is a factor in all of that. So yeah, I don't know if it's necessarily just one thing. I think it's a combination of things. I would love to say it's because we're seeing this great economic expansion in the United States, but I'm not so sure that's true just yet.
Got it. That makes total sense. Shai, we have some news popping in right now.
Yep, absolutely. So we have up in 15 seconds. or so. We have initial jobless claims survey is 226K, and continuing claims survey is 1.954 million. Both of those are in line from what we've been seeing for weeks and weeks and weeks. So let's see what the number is. Come on. All right. Here we go. So lower than expected initial claims, 217, and continuing claims came in at 1.955, 1.954 was expected. So continuing claims in line with the survey, and initial claims less than expected. So it seems, at least on the outset of these numbers, that the labor market is not collapsing by any stretch of the imagination yet.
So yeah, I mean, the stock index futures haven't really moved that much. Even the S&P is still just kind of sitting around that 6,400 level right now. Yeah, a slight downtick, but no surprises there. I guess my question to Michelle would be, is labor under control? Do we have to worry about this? Does the Fed have to worry about this part of the dual mandate, or is that rear view mirror stuff? We're focusing on inflation.
For me, it's rearview mirror stuff and focusing on inflation. Again, we're in a huge just shift in so many different areas, and even in terms of labor, with AI and robotics, we're seeing a lot of things that are going to shift in terms of the types of jobs people can get or things that go away. And I wouldn't necessarily judge that as a bad thing. I think that's just evolution. And probably at some point will create different types of jobs. And what we're seeing, obviously, is that, like, for example, in the hospitality industry, where there is a labor shortage, I think the biggest shift we may see in terms of the labor, what we're already starting to see, is that a lot of the lesser paying jobs, or jobs that are more been involved with people that are undocumented, those are starting to find a shortage, and the hospitality whole industry has been impacted as a result. Like I read in California, the people who work for hotels are wanting $30 an hour. That would just be devastating, I think, to a lot of the hotel chains that are already experiencing such high costs. And how much is the consumer, can they pass that on to the consumer paying for hotels? I'm already seeing hotel prices going up again. So that's where I think the labor is impacting the most, as far as I can see from my purview. In terms of the rest, as the young generation shifts more into tech and AI and robotics and programming and all of that, I think that's been a good thing. And I also think a lot of people, especially younger people, are supplanting their incomes with trading. I mean, that's one of the reasons why we're up here, right, is from the retail investors.
The rise of retail, absolutely. So we have a couple minutes left. Shai, what am I forgetting to ask here?
So I wanted to know really what particular sectors are you focused on right now that maybe have caught your fancy, so to speak?
Well, we talked about energy and metals, and also even the softs. Like I've been watching DBA, which is a nice conglomerate of agriculturals and softs. That also, even though it's come down from the high substantially, it's still, compared to where it was, let's say in 2020 before COVID, doing pretty well. So getting back to that trifecta, I mean, obviously the dollar being weaker is part of that. The gold to silver ratio, where silver starts to outperform, is part of that. And sugar is part of that. And sugar, with the announcement of Coca-Cola, doesn't necessarily mean that sugar is going to go up. There are other factors that make sugar go up, and a lot of them have to do with countries that are in economic trying times turn to sugar or turn to comfort food. So that's one area I'm looking at, still very much in commodities. Outside of that, I've been fascinated by the diet drugs. I am so fascinated by the fact that pretty much everybody I know that has suffered with either being overweight or even actual obesity is on these drugs and have lost weight and feel so much better. So I'm looking not at just the diet drugs themselves through Novo Nordisk and Eli Lilly, but also looking at what people do once they lose weight. Well, they buy makeup, they buy supplements, they go to the gym, they buy more physical attire to go work out. And if you look at that whole board of stocks right now, look at Ulta. Ulta has rallied $150, and yet you never even hear about it on media very much, right? It's not an AI stock, but yet that's been doing well. Elf Beauty has risen, and New Skin that came in from the dead. Stitch Fix, which actually people can buy clothes at home, custom made for them in return. That would be great for somebody who just lost a lot of weight and may not necessarily want to go to a store to buy clothes. This is really where I'm looking, and I think it's going to be a huge trend as those drugs get more affordable and more mainstream.
Wow, that's great. I mean, I could talk to you all day long. Unfortunately, we are out of time, and I like the way you kind of drew that, kind of made that connection between the drugs and then the health and then the beauty all together. That was awesome. I never thought of it that way. Folks, you could find Michelle on X at Market Minute. At Market Minute, we'll go ahead and cut that into the a chat in a second. And then your website is marketgauge.com. Is that correct?
That is correct.
Awesome. Well, thank you so much for being here with us. We greatly appreciate it. It was awesome intel, and looking forward to talking to you again.
Thank you so much. It was great to meet you all, and or I should say, see you personally. And I look forward to coming back as well. Thank you.
Awesome.
Excellent.
All right. All right. Well, she was awesome, man. I gotta
Yeah,
say.
she is great.
Yeah. Wow. All right.
So-
Follow her on X. Follow her on X, everybody. Oh, anyway, Shai,
Absolutely. All right.
It's that time. The man, the myth, the legend is back from parts unknown. We're going to bring him in now. Farm is in the house. How you doing, man?
I'm tired, but doing well. Plane was late last night. It's about like 2 hours, so got about 3 hours of sleep. So just excited to be here and maybe get a little nap later.
Yeah, but you've gone through this before. Last time we talked, I think you were up until 2 in the morning looking for a trade the night before. So you're a warrior here.
Yeah, I meant to say that 3 hours was too much sleep for me, so I was tired because of that. But no, yeah, I'm generally used to 4 to 6. Probably 3 is a little short for me, but it's good to be back, right? It's always nice to get back to your own bed and your own shower and things like that, and an actual trading desk instead of working from your phone from the middle of a lake or something like that.
Yeah, I'm the opposite, man. I'm early to bed, early to rise. And last night we actually went out to